From September to October, the Terranet National Bank Composite National House Price Index rose for a fourth consecutive month. Our guest says this can be attributed to the Bank of Canada's rate cuts. With the central bank expected to go on easing, he does anticipate that the housing market could remain strong. However, that's provided the labour market remains stable. We're joined now by Daren King, economist at National Bank of Canada. Daren, thanks very much for coming on the show.
Thank you for having me.
You have some great graphs for us. Maybe we'll walk through them and get you to talk about them. The first one shows affordability in Canadian cities. In other words, the amount of median income you need to carry a mortgage. And it's obviously very high in Toronto and Vancouver, murderously high. Basically, all your income goes in Vancouver. We've seen some slight improvement lately, it seems.
Yeah, exactly. We saw some improvement, thanks, of course, to interest rate that decrease over the quarter, mostly fixed interest rate decrease. So that's obviously a good news for our first-time home buyers. And lately, also variable interest rate. But at the same time, we saw, yes, a small increase in home price index and home prices in general. But we also had stronger revenue growth. So that's really the main factor which really improve affordability. But it remains really an issue at the moment. So over the next few years, definitely we think that will be a factor that will limit the capacity of home prices to grow at a very strong pace like we had during the pandemic.
Our next graph shows the home price in Canada, and I know it's a little, because the markets vary so much, it's a little misleading, but we're still off record highs. You reckon that the price index shows our market is gaining momentum?
Yeah, definitely. It took some time, to be honest. When we were looking at the housing transaction since the first rate cut in June, we saw marginal increase in Canada, but we really had a huge pickup in the transaction in the housing market in October. Sales went up by roughly 8%. So, of course, that put additional pressure on home prices. That's why we saw an increase lately. But still, on a year-over-year basis, home prices are only up 1.4%, so that remained relatively low on historical basis. And compared to the peak we had in 2022, right before the Bank of Canada started their increase in interest rate, we're still down 1.6% overall in Canada on the home prices front. So we're not back to where we were before that.
And home resale activity picking up. I mean, that's the sign of a healthier market.
Yeah, I think definitely lower fixed interest rate and also the change of momentum by the Bank of Canada really put additional fuel into the housing market. Also, we are expecting a new mortgage policy in December. The amortization period will be extended for first-time home buyer to 25 to 30 years for an insured loan. So we think that will definitely also help support the market. And on the other end, we also have a Bank of Canada that we expect, which will continue to decrease their interest rate over the next month. So that will definitely help support the market. We're not expecting really a huge boom into the number of transactions and on home prices, but still that's a good news when you are looking at the overall economic condition in Canada and the where the economy is at the moment. We are definitely under the potential GDP, so that will help fuel a little bit of recovery into the Canadian economy.
The big threat, though, you say, is a major weakening in the labour market. In other words, if people don't have jobs, they can't buy houses.
No, definitely. And when we're looking at the data at the moment, yes, we saw a huge deterioration of the labor market, especially for young people and newcomers. But still, when we're looking at employment rate for prime age worker, we saw also a deterioration deterioration on that front. So of course, if you are a first-time home buyer and you want to buy a house, you need a job to do so. So we saw the unemployment rate decreasing also. We had a small stabilization over the past 2 months, but still we are expecting the Canadian economy to continue to decelerate in the coming months, and we are still expecting a deterioration of the labor market. Probably the unemployment rate will reach 7% in our forecast scenario over the next quarters. So if it limits to 7%, I think we can still expect a strong housing market. But if it's worse than that, then of course that will break the activity on the housing market, obviously.
And finally, the politicians, of course, like to talk about increasing housing supply, but massive municipal development charges and objections from local residents are roadblocks there. Do you think this country will be able to significantly increase the number of homes we're building?
I think it will definitely take some time. Definitely, government plans are really optimistic. I think that's the only solution to the affordability crisis that we are facing at the moment. So we'll have to do it, but it will probably take a decade to really to have a really huge impact on affordability and to go back to where we were before the pandemic. So it will really take a lot of time. Of course, it's a lot of factors that will need to work together at the same time, so we can build more supply in the Canadian housing market. But I'm not expecting a huge jump in housing starts next year, since it will take a lot of time before all those funds and programs really take traction.